We recently took a look at Coke versus Pepsi. So, how about we take a look at Coke versus Berkshire Hathaway? These two aren't just heavyweights in their respective industries, they're also linked financially, which I think adds an interesting dimension to the comparison. So, let's take a look. Coke has been in Berkshire's stock portfolio since 1988 and is currently the fourth largest holding by market value. Berkshire's 400 million shares amount to about 9.4% of Coke, making Berkshire Coke's largest shareholder. Coke is based primarily on the sugary beverages, which have fallen somewhat out of favor as consumers become more health conscious. In response, Coke has narrowed its focus on the more profitable businesses. Among the moves in that effort was to spin off its low margin bottling operations. Another was to expand its offerings in various non soda beverage categories, such as juice and energy drinks. Recently, it even acquired Costa, a chain of coffee shops. Although Coke is most identified with its namesake sugar beverage, it has done well by branching out. Organic revenue rose 6% on a year over year basis in the company's most recently reported quarter. Unit case volumes showed small growth of about 2%. Adjusted per share net profit came in higher than analysts' expectations, up 14% to 58 cents per share. Analysts in general think the company can keep growing. Collectively, they're forecasting 6% earnings per share gains for fiscal 2019 and rising revenue of about 4%. Last year included plenty of highs and lows for Berkshire Hathaway. The performance of the stock in Berkshire's portfolio was mixed. Longtime Buffett favorite Wells Fargo lagged well behind its big banking peers, largely due to the fallout from a series of scandals. Apple, the number one holding by market value, had a rocky year as well. Apple stock sank by about 7%. In fact, the only stock among Berkshire's top five holdings to reach positive territory from the beginning of 2018 to the end of 2018 was, well, Coke, with a 3% gain. Berkshire's troubles with its major stock positions overshadowed some positive developments for the company, particularly for the insurance holdings. Compared to 2017, 2018 was light on major disasters, so the company's insurance operations performed much better on a year over year basis. The prospects for Berkshire's portfolio today appear a bit brighter. Apple recently reported a quarter of record revenues and net profits. Additionally, other Berkshire holdings, including American Express, Visa, and MasterCard, are leaders in every expanding marketplace and should help keep the share price on an upward march. However, the choice between these two stocks is relatively easy. Berkshire Hathaway has so many sources of revenue and profit growth. Besides, Berkshire owns enough Coke to make it my choice. So for today, that's ChewDog Charts. Thank you.